So let's get across some of the big stories that are moving markets this morning. Kevin Green joins me now. What's your overall thought on what we're seeing here this morning? A bit of a different picture to how we finished yesterday, Kevin.
Yeah, seeing a little bit of a mixed market if you're kind of looking at the performance of the S&P 500, but we have seen a little bit of an area of resistance that we're testing right now, and I think the market's really looking for another positive news catalyst in order to break us higher and get us to new all-time highs. You are seeing some profit taking in a lot of the commodities as well. Crude oil continues to see a little bit of pressure after bouncing a tad bit earlier this morning. Silver, gold also selling off here a tad bit, but once again, this seems like more of a profit-taking level for the S&P 500. You get a little bit concerned about yesterday. The price action was great, but the volume was a little bit light, and so you want to see volume actually kind of backfilling a lot of that price action in order for technicians, those that really kind of focus on the technicals as market structure as well, to confirm that we're able to make these new all-time highs and sustain these current levels. So I think right now that's really what we're focusing on. Looking at the government shutdown, that could also be weighing on the yield market as well. We are seeing yields continuing to move lower. We're sitting at around 3.95% for the 10-year Treasury yield, and that might be your a little bit more of a risk off tone, if you will. And so a lot of dynamics taking place. A really decent run from yesterday, but you'd like to see a follow-through day. You do not want to see VIX re-rating higher, volatility re-rating higher. It's up to around 18.8 right now. Not too aggressive. We are seeing a little bit of a downtrend, but if we start to re-rate that to around 21, 22, you start to question how much more profit taking a lot of these traders and investors are going to do over the next couple of days, just given the fact that we had a nice run off of the lows from last week.
Okay, so a bit of profit taking perhaps in commodities, looking for a catalyst right now. Obviously, we're waiting for some more government data. We'll be getting the CPI at the end of the week, but so far so good as far as the earnings picture is concerned. We continue to pass over a number of corporate numbers and results this morning. I'm just looking across some of the winners on the session so far. I mean, you've got GM, for instance, off the back of what they've been saying, and also Raytheon RTX, as it's now known, hitting a high on earnings, double beat and raised there on strong execution. But we're also seeing some fairly good results, you could say, and some also positive commentary off the back of them from some of the analysts already across the defence space. So what are your takeaways from what we've heard from the likes of Northrop and also Lockheed Martin?
Yeah, so the earnings for defense stocks are going to be very interesting. We're also seeing Northrop actually down on the session as well. Each and every company obviously focuses on a specific industry or subset of the defense industry sector, industry as a whole. And Raytheon, or RTX, if you will, is definitely seeing a positive move to the upside, up about 11% so far in the session. They did beat both in the top and bottom line, but was actually very interesting. A couple of quarters ago, around 2 quarters ago, RTX actually re-rated their guidance to the downside because of tariff impacts, as well as maybe lackluster demand, especially when it comes to some of the engine parts that they do service, but they have seen a surge in that demand when it comes to those engine parts, and so that's why we are seeing the stock moving a little bit higher. A lot of defense contracts are also hitting this space as well. A backfilling of these munitions that they do service and they do produce is also taking place, not only here in the United States, but also in Europe, and so you are seeing the stock move a little bit higher. Lockheed Martin right now, LMT, down about 1.6%. Once again, mixture in this space. Lockheed has had some headwinds when it comes to the F-35 program as well, and it has been leveraged as an asset, if you will, within these trade negotiations, not only when it comes to the Asia-Pacific markets, but also in Europe. And so what is their guidance moving forward? What is their outlook moving forward for the F-35? And are they able to get some of the software issues with that product offering fixed in order for demand to kind of spike a little bit more here? So a mixed picture, but RTX, which has done a phenomenal job this year, seeing a nice little bounce after their earnings announcements, their beat and raised, and not only their guidance moving forward, but the commentary that we're hearing from their leadership team.
Yeah, strong execution was certainly the word from the C-suite, and also obviously they're continuing to ride both the tailwinds from the defence contracts and also the commercial aerospace business. So they are fairly diversified, which perhaps speaks to the reaction we're seeing this morning. Okay, those are the defence stocks off the back of some of those results today. But just switching gears, I mean, you mentioned a bit of profit taking going on across the commodity space. I'm just looking at gold retreating on the same day as we're seeing a pullback in silver, and really across the board. I mean, is it just a case of, you know, perhaps traders, investors taking a little bit of a breather ahead of what is likely to be the next catalyst, and that is the CPI? I mean, what's your outlook now for sort of the rest of the week here?
Yeah, I mean, if you're looking at the metals, they've had a really decent run. The industrial metals were kind of signaling that profit taking was going to take place here over the last couple of trading sessions. You can see palladium, platinum also selling off aggressively. Gold, we had that really sizable volume candle on Friday. We talked about that going into the close there. Yesterday, we did see a little bit of a retracement or a bounce to the upside, but once again on light volume. Today, we are seeing some selling action on larger volume. So could we be at a consolidation point? That could be the case. If you look at a 4-hour chart, you could also say maybe a double topping pattern. A pullback could be necessary here. Gold is not testing the 20-day moving average yet. That has been an area of support. It's not also testing the primary trend line that's been in place since August as well. So it still has maybe some room to go to the downside before some buyers really try to step in here. Silver, on the other hand, is seeing some aggressive selling today as well. It is testing the 20-day moving average, trading below that right now, and actually testing a key area of support. Silver is an industrial metal as well as a precious metal. So from the silver standpoint, you want to see a hot CPI print. You want to see some really good economic data in order for this to really hold up. And maybe some of the speculative fervor that has been in this market, especially from the retail traders, is maybe losing a little bit of its luster. But silver, from a fundamental standpoint, is in a structural deficit, and you are still seeing very strong demand on the demand side when it comes to the industrial demand, especially when you're looking at solar panels. So profit taking for now. Let's see if the technical structure actually holds up here. We do see a bounce over the next week or two.
Yeah, I mean, speaking of technicals, I mean, obviously yesterday we were talking about how the markets had sort of largely been looking past some of the US-China trade tensions, largely looking past the government shutdown, given Kevin Hassett's commentary, and also sort of largely looking past all the other worries about credit concerns right now. And so that is obviously why we saw a nice rally. But you mentioned the VIX picking up speed just fractionally here as we do see a little bit of a pullback of the major averages. What are the charts telling you right now about volatility?
Yeah, so volatility, if you kind of look at VVIX or vol, we probably should see that a little bit elevated today. The VIX contracts or the VIX options actually expire tomorrow morning, and today is the last trading session. So VIX contracts just in general probably will take the top tick if you're looking at overall trading volume for the index options, at least for today. And if you're looking at it from a technical standpoint, rightfully so, we are seeing a pullback in the S&P 500. I mean, we got fairly close to the all-time highs. This 6750-ish area was going to be an area of resistance. We're pulling back right now. What you want to be able to see if we have more aggressive selling today, coming back, retesting that 20-day moving average, that was an area of resistance last week. Does that now turn into an area of support, and do buyers step in and try to push us higher? I still think the bulls still have a little bit more in favor over the next couple of weeks because of earnings season. We have seen a very low bar. We have been exceeding that bar, and I think not maybe Tesla so much, but if you're starting to look at the Metas of the world, the Google Alphabets of the world, are they going to be able to really rocket us higher? And if you look at the communication services sector, that has been in a little bit of a bearish formation, especially last week, but yesterday you did see some bullish activity, potentially a MACD cross in the bullish formation here, and that could actually be the sector that really leads us over the next week and a half, 2 weeks.
Of course, over 80% of the companies that have reported so far have actually beat on earnings. So far, so good. So let's see, as we do certainly see some of those dip dive buyers stepping in and lending some support as we've seen in recent weeks. KG, thank you so much for getting us across all of that today. Appreciate your time.